What's up, guys? My name is Amal. I'm part of the technical analysis team on the Crypto Somniac community. I just decided to do a charting basics lesson 101 for those who want to learn how to chart on TradingView or use different charting software to either understand how stocks move, how to do the basic analysis on a particular asset. So let's get right to it. I wanted to show you guys a super complicated looking chart, my Bitcoin chart, right? Sometimes it looks a little bit more daunting when you see the chart like this and all these lines and flags and wedges and all that and Fibonacci's. But I'm gonna make it really simple for you guys today, and I'm gonna open up a fresh chart, and we're gonna go through things together. Here are things we're gonna go through today. Okay, we're gonna look at a fresh chart, identify the overall macro trend, look at different time frames, how to draw trend lines, how to draw horizontal support and resistance levels, different indicators that are useful, different candle types like Heikin Ashi, bars, the Japanese candlesticks. We can learn how to set price alerts, and then I will go through some of my favorite indicators that I use. Okay? All right, let's get right to it. So here's a super complicated looking Bitcoin chart, right? I'm gonna, again, open up a clean chart right here. Let's open up this one. And I'm just gonna delete everything, okay? To delete everything, you go to the far left pane right here, and you just do remove all drawing tools. And then these indicators right here, you just turn off like this, okay? You go close that out, close that out, close that out. And then for this one, this is a volume profiling, visible range. You just hit hide, okay? So now we have a fresh chart. This is on the daily timeframes. All your timeframes are up here. You can also create customized ones over here. And now we're looking at a fresh chart, right? So our first thing that we have to look at is identify trend, okay? So what does this trend look like? Now, if you were, let's just say you didn't see this part of the chart right here. What would this trend look like? Well, it's clearly, let me pull up an arrow right here, and you can pull up the arrows right here and all the different drawing tools on the far left, okay? So we're gonna pull up arrow. So this trend is like that, correct? So let's mark that green. You can change the colors right there at the bottom. And the other trend that we've been in since beginning of December is like that, right? Red, okay? Let's mark that red. This is what you need to look at when you're looking at any particular asset, whether it's Bitcoin or let's just say Tesla, right? Tesla's been getting killed the past few days, so let's just take a quick look at it. Weekly charts on Tesla are kind of useless, so let's look at or daily charts are useless, let's look at the weekly, okay? So as you can see, clearly, this chart is still on its way up, right? I mean, clear uptrend, okay? So first thing first, identify trend. Okay, look at multiple time frames. Okay, 4-hour, daily, and weekly are good time frames for charts that have enough data, and even monthly, potentially, right? This is Tesla on a monthly chart. Again, clearly an uptrend. Okay, so let's go back to our Bitcoin chart over there. So here on the monthly chart, I mean, this is a little bit different. Bitcoin obviously doesn't have that much data. But even on the monthly, guys, you can clearly see that, last year, August 2017, all the way till December, we were on a clear uptrend, almost a parabolic move. And then since December, all the way down, we are on a clear downtrend in the macro view, right? So on the daily chart, we're going to go back to it. And we're going to look at this one more time, okay? So we've identified the trend, okay? So let's just get rid of that. All right. So now what? Now where are we? Okay. Today we are right over here. Okay. So we are essentially in an area that has been tapped multiple times due to support. Okay. So how do you identify support? Well, you can identify it two ways, right? You can look at where the bottom has touched every time on these consecutive cycles of the up-down movement, and you will see if you draw something like a rectangle. And you could choose that right over here, right? Just go sideways. Look at the bottom that's been drawn. Let's just say we picked the bottom from this bottom, right? Look at these closing wicks right there, right? So this is essentially the bottom range of Bitcoin that This is technically called a demand zone. This is the bottom support zone, okay? Every time Bitcoin comes down to this zone, we see a rapid movement to the upside, right? We've had a movement up. Once it touched there, when it touched here, it moved up. When it touched into this zone, we stayed in it for a decent amount of time, and then it moved up again. And again, we came back in it, we moved up again. But every time that's happened, right, as you can see that since the 20,000 high, this lower high has been created, another lower high, another lower high, another one, and another one. So what is a lower high? It's just two words, right? I mean, it's just lower high, meaning this is the all-time high right here. And this is every time it hasn't been able to, Bitcoin hasn't been able to exceed this price range right here, it creates a lower high, meaning any price under 20,000. And then it turns down again and again and again and again. And it's doing that one more time, right? So these are all consecutive lower highs that we've created. And this marks definitively the idea that Bitcoin is in a clear downtrend, just like that, right? So now you know the trend. You know that you validated clear lower highs being created. You now know the support zone that Bitcoin was in, right? Let me try to put all that together. Okay, so this is again the demand zone that we have, right? Every time it's touched. And another thing to note, right? Every time Bitcoin has come down, okay, we have closed over here around about, I think that's about 6,800. Then over here, multiple candles closed about 6,600. Down here, we closed a candle around 5,800. And then we closed a candle around $6,100 or so, okay? The wicks, we can just ignore for now. But the candle closing is important to watch because it helps you identify that, okay, even when the wicks came all the way down here, so let's zoom in, okay? The wicks came all the way down here, right? But the buyers did not let the price come all the way down and close. They pushed the price back up and closed the candle on the daily all the way up here. So how do you look at that, okay? So if we look at this particular candle, let me go into it. And that's how you zoom over here, guys. It's on the far left pane. Okay, so this is the candle from February 6th, right? That's the first time we essentially hit $6,000 level. Okay, the low of this candle can be seen all the way over here, the open, high, low, and close. Okay, the low was 6,000. The high was 78.48 or 78.78. The opening of the candle opened here and it closed here. Or sorry, it opened here and it closed here. Okay, so that means that at one point during the candle, the price went all the way down here to 6,000, but the bulls did not accept that price. They just said, no, thank you. We're going to keep buying all the Bitcoin that you dump, and we're just going to keep pushing the price up, okay? So the price essentially closed at 76.52. It went to a high of 78.78, but the bears pushed it down a little bit. So the price eventually closed at 76.52. So that's how you look at candles, okay? Bullish candles, green candles, open at the bottom, they close at the top. Bearish candles that are red candles, open at the top, close at the bottom. The wicks are the lows and the highs, okay? That's how you look at those candles. All right, so again, we've identified a trend. We know that there's a big demand zone essentially in this area, this box, right? Probably from a high of 6,900 all the way to a low of $5,800. Okay, and we also identified that there are lower highs being consecutively created. Now let's try to draw some trend lines and see if they match up or if they mean anything. So what are trend lines? Trend lines are essentially lines and points connected to highs or lows of an asset that could potentially give us an idea of where the price could move. Okay, so here you have the connection of this high right here. So you can also connect either bodies of the candle or the wicks. Today we're just going to do the wicks. So there you go. Okay. And also, if your chart looks a little bit different than mine, it's probably because I'm in the log scale. The log scale is essentially equidistant price or percentage movements. Okay, so 8250 to 8850 is the same percentage change from 8850 to 9600. It essentially reduces the noise of the overall chart. Now, if I move it like this, see how the chart is, more, I guess, volatile. And if I turn the log back on, it's a little bit more smoother. Okay. Be careful when you know that, because if you do draw your lines in linear, they'll be completely off. See, this line makes no sense, this trend line. But if I put it on log, it does make sense. Now you can see this point touching, and this point touching. So let's just imagine that this entire move right here from June onward didn't happen, right? And all we did was connect this March or February move to this May move. Okay, so look at that, right? We would have seen that the price could have potentially been coming to meet this trend line, because again, this is a clear trend line of Bitcoin. So even if the price was down here, you could have made a target on the price to say, you know what, I don't think Bitcoin is going to break the trend line, and I'm going to sell whenever it comes right near this trend line. And that your target would have been somewhere around 82 or 8,300 bucks, while the high of Bitcoin around that area was about 8,500. So, that's kind of how you would play trend lines, okay? Now, support lines would be similar in a sense, right? So how would you draw support, okay? A support could be drawn kind of like this, if you want to make supports meet. So we have this wick going all the way across, kind of like that, right? So it's touching and gutting through multiple candles, which is, again, it's not a bad thing. It's just that we're trying to identify what's the best fit for something like this. Well, it may not be that, right? It may be something like this, where you touch the body of the candle and this one and this one, and now you have essentially something like a falling wedge per se. Okay, kind of like that, right? See, there you go. That is your falling wedge. What is a falling wedge? Well, falling wedges are essentially prices that are tightening in a range. Okay, they're moving and moving. The lows get lower, the highs also get lower, and you're essentially tightening the price, and then eventually the price is going to break to the upside, okay, after a lot of tightening. But that could happen at any point during the falling wedge of this pattern. It could go all the way until, next February, okay? So that's kind of how you draw the trend lines, okay? Let me delete everything and let me show you guys support levels, okay? So let's go to the current price range, okay? So this is on the daily time frame, right? And also, if your chart looks kind of wonky like this, you just right-click here, you do auto fits data to screen, okay? And then your chart is visible and it fits to the screen. All right, so we moved all the way down for the past, 4 days now, right? And we're stopping here. Is there any significant reason why we're stopping here? Well, let's see. Let's try to get a horizontal line, right? So you go over here, grab a horizontal line, and you just click, okay? Now, is there a reason? Okay, why do we stop here? Why did the wick stop here? Well, let's see. Let's look to the left of the chart. We see that this bottom wick touched here once. This bottom wick touched here twice. There's another one right here that touched. Let's see if we can go back. This one back here touched, right? I mean, pretty close to it, but not perfect, but really close. And then the high of this candle back here in October also used it as resistance. So there's a particular reason why the price comes back and gravitates towards this area. It's because we have this horizontal resistance and support level, right? Another one of our topics that we're trying to go through, horizontal support and resistance level. So we've looked through a fresh chart. We've looked through different time frames, right? We've done trend lines. Now we're doing horizontal support and resistance levels, right? So this is one of your horizontal support and resistance levels. And how do you identify this resistance? Well, let's see. Let's see if, why this area was touched, okay? And you can move it a little bit higher to the wicks. Well, you see right here, right? If you go to the left of the chart, again, there was some sideways, this is called accumulation, okay? Accumulation basically happens when there's a lot of buying happening and the price is getting ready to have another push, okay? Back here, this is distribution. When the price is already falling, right, there are enough buyers and there are enough sellers to create an equilibrium of the sideways movement. But remember that the price is on its way down, right? It's on its way down. So this is called distribution. When it's on its way up, this is called accumulation. So in the sideways movement, we see that multiple candles touch this area. Now, again, it doesn't need to be perfect. It's great if it is, but clearly multiple candles touched this area, moved up and down, and then eventually broke down, right? This tells me that this is another significant level where Bitcoin could be using this level as support or resistance in the future, okay? So now that we're down here, this is our support because, again, we've identified it multiple times touching this area, right? 1, 2, 3, 4, 5, multiple times in here, and then back here too, right? So, and on the way back up, if Bitcoin starts moving, this is going to be a critical support or resistance level, rather, okay? So that's kind of how you identify horizontal support and resistance levels. Now you can also do this on multiple time frames. You can do this on the 4-hour, just to get an idea of, maybe some, accumulation or different wicks that are moving up and down that you may realize, okay, why do we stop here? So for example, let me give you an idea. See this entire sideways movement right here that we've created, right? So let's just do it like that, okay? So it's touching the top of the wicks and the bottom of the wicks. So I've grabbed that entire price range. And now what do we have? Let's go all the way to the left, okay? Did this move right here, the sideways move, this distribution move, mean anything? Did we use this area before in price action? We're clearly, right? See, there's a lot of noise in this particular area. This entire area right here, starting from middle of August, was used multiple times as resistance, support, broke through once, came back here, tested as support, and then the price essentially moved away, broke through, and never looked back, right? But that's important to essentially keep in mind when you have some sideways movement right here, then you know that, hey, there might be a reason why the price is stopping here. And you just look to the left of the chart and you'll be able to figure it out, okay? So that's 4-hour time frame. And even on the daily, I bet you can even, tell then, right? Let's see. Again, a lot of sideways, consolidation right here and then move up and not look back, okay? So horizontal support and resistance levels. We've also identified how to look at different time frames to ensure that, hey, is there more noise that has been caught during this particular sideways move? So yeah, all right. So indicators are the next topic. So some of my favorite indicators, so I have this sheet right here, right? Basically, I wrote this down for you guys. How do I chart an asset and what augmenting tools and indicators do I use to give me a better idea of where the price could be headed, whether it's up or down, okay? Primarily, I use raw price action as I showed you guys. So if I just hide everything on this chart, you hit this I right here, hide all drawing tools. I like to look at raw price action. This is the daily chart, and then I like to look at the 4-hour, maybe 1 hour, and sometimes 30 or 15 minutes, okay? It just gives me an idea of multiple time frames and how to look at that, okay? And then I like to use the horizontal support lines. I showed you guys that, trend lines, and then candlestick patterns, okay? So candlestick patterns, you can, again, do it on multiple time frames. This is obviously called a bearish engulfing. Why? Because it's a big bearish candle and it engulfs the preceding one. There's an indicator. So indicators are found here, indicators and strategies. And if you click here, there's one called candles, right? So you just see this one right here. You just unhide that. And here you can see that this candle, well, okay, clearly it doesn't say this one's bearish engulfing, but it definitely is. This candle is no more different than this one, which is also a bearish engulfing candle. Again, just like this one, bearish engulfing, right? This one being created right now is potentially a doji. Don't worry about, you know, the H stars and the bearish engulfing or bullish engulfing ones, but you get the idea. If you want to learn more, you know, go on Investopedia and start typing in candlestick patterns. There's all kinds, guys. There's dojis and long-legged dojis and, you know, gravestone dojis and bearish engulfing, morning stars, shooting stars, all kinds of stuff. If you have any more questions, shoot them my way, and I will give you guys a guide of how to, you know, learn candlestick patterns. All right, so indicators. Let me go through that actually. Price action, patterns with price action. So I showed you guys earlier how the falling wedge was created. Now I can show you guys also how maybe we could, let's look at the 30-minute chart, okay? So back here, right, guys, when we had this huge sideways movement, okay, this could be seen, let me pull up the 4-hour. This entire move right here, right, starting from September 5th all the way down, this could be seen as a big old bear flag, okay, kind of like that, right? This is the pole of the flag. Then you have essentially a sideways movement like that, creating the actual flag itself like that. And these flags essentially break down. Again, you guys should go on Investopedia and learn why particular patterns like this break down. If you have any questions, you know, reach out to me in Discord. But that's, you know, one of the flags, right? Within the flag itself, you know, you could have drawn maybe like a diamond bottom, right? So remember I told you guys that there's a diamond bottom being created, but it essentially doesn't, it doesn't mean that diamond bottoms always break to the upside. This is kind of your crappy looking diamond bottom. Typically, you know, most people say that they do break to the upside. While they may be right, that's only 69% of the time. 31% of the time, they can actually break to the downside. And I told you guys that this one would definitely break to the downside. Okay, so that's how you can draw patterns within larger patterns. You know, this one right here, this entire move right here, the structural move, could be seen as a rising wedge. How do you draw a rising wedge? Kind of like that, right? You can touch multiple wicks. If you want to, kind of like that. Again, it doesn't need to be perfect, but it also doesn't need to be forced, okay? So this is your rising wedge, okay? You see the pattern doesn't get invalidated too many times. I mean, I'm touching, you know, major high moves of the wicks, right? I'm touching here once, twice, 3 times, 4, 5 times, and then bottom here. This is like also a rising trend line, but it also creates a rising wedge. And rising wedges break to the downside. Okay, again, learn it on Investopedia. Okay, set price alerts. Basically, if you guys have price alerts that you want to set up, all you do is just go to the right side of the price, and you can just click right there, right there. I don't know why it's not doing anything. Oh, that's why. You just click on that, right? You could just click add alert. Okay. You can, you know, obviously you can connect your TradingView account to different brokers and exchanges, I think, but this is just how you set alerts, okay? And then you'll get an alert on your screen showing that either over here or it'll pop up in the middle of the screen showing that the price reached your alert, okay? All right, so different indicators. All right, so let's pull that up, okay? So here we have on the left, this again, indicators can all be typed in right here, kind of like MACD and RSI, stochastic RSI right there, OBV, which is on balance volume right there. So all those can be typed up, and I save all my indicators right here, whether they're customized or not. So let's go through it, right? With the price action that we have right now, let me turn on something, my favorite indicators, which is TD Sequential and Ichimoku Cloud. And then let's turn on some moving averages. Okay, that's 50 and that's the 100. Okay, so check this out, right, guys? Let me delete this TD and let me add the modified one. Okay, so check this out, guys. On the daily chart, right? Typically, if you understand TD sequentials, on a 9-point move, right? You typically have a 1 to 4 candle correction to the downside. If you have 9 candles to the upswing, right, in an impulsive move, you'll correct 1 to 4 candles down. And then you may resume your uptrend. But usually after 9 candles, 9 completed candles like this, you'll correct down and then you'll move up. But here, as you can see, we had completed 9 and then we completed 4 more to the upside. Now 13 is the highest count on the TD. Okay, after 13, you most definitely will get a correction. And clearly, as you can see on the 13, we broke heavily to the downside, right? So let me hide all my drawing tools and just keep these indicators up. Now check this out. On the Ichimoku Cloud, right? This is your entire Ichimoku Cloud, okay? The Ichimoku Cloud has the cloud itself, which is this red area right here. Back here is green. Then there's 2 lines. They're called the conversion or baselines, also known as the Kijun, which is this reddish line, and the Tenkan, which is the blue. Okay, whenever you have the Kijun line above the Tenkan line, that means you're in a bearish environment. Okay, when you have the Tenkan over the Kijun. Wait a second. Did I get that wrong? I'm sorry. Hang on 1 second. Okay. Yeah. So Kijun over the Tenkan, which is the red over the blue, is bearish. When you have the Tenkan, which is the blue over the red, that's bullish. Okay. So here you can see that this move, right? When you had crossing of the TK, the Tenkan, the Kijun, way back here, right? This right here would be your sell signal, okay? Way back here, because why? The Kijun, right, the red, crossed over the blue, way back here around 13,000, okay? And it didn't give you a buy signal till back here, but it only gave you a buy signal briefly, okay? And then, again, it came down again. And then again, it gave you a little bit of a buy signal, and then it sold off again, okay? But overwhelmingly, this entire move is telling you that the cloud above us is red, meaning it's bearish. Typically, when the price is above the cloud and the cloud is green, that's the most bullish price action you can get out of the TD or out of the Ichimoku Cloud, okay? When the price comes down under the green, that's semi-bearish. When the cloud above is red and the price is under the cloud and you've had a TK bear cross, meaning the Kijun, the red, is over the blue, you are in a heavily bearish environment. As you can clearly see, we are in a heavily bearish environment right now, right? We're under the cloud. We've had a TK bear cross, right? And even the TD sequential, which is a separate indicator, told you that we hit 13 straight candles on the way up, and you are about to start seeing a massive drop in price. Okay. All right, guys. One last thing. Volume also is very important. So volume is probably one of the most important things that you should look at. So let me turn this off, all this off, and let's turn on the volume. Okay. That, and also turn on the Bollinger Bands because I like the Bollinger Bands indicator. Okay. So here you can see the volume in Bitcoin, okay? As you can see, the volume back here, let me pull up something else because this volume is very misleading. Tether volume doesn't mean anything, guys. You should focus on the actual BTC US dollar pairing value on reputable exchanges like, you know, Bitfinex or Coinbase. So back here, right, you see massive amounts of green volume, okay, way back here in December. And then you start seeing big old piles of sell side bearish volume all the way, all the way. But also, another interesting thing on the volume is that the volume is increasingly declining. See, like that, right? You can definitively say that volume is declining, and in the past 8 months, it has been declining, right? So declining volume also tells you that, hey, there's just not enough interest in this particular asset, and it's either going to make a move where the volume is very, very thin to none, and it's going to break down and have capitulation, or it's going to break to the upside. We can't tell just yet, but knowing that the volume is heading down and the chart itself and the asset itself is trending down, I know that we still have a long bearish period to go. Okay. I mean, you can even look at this right on the daily chart. Look at the volume over here for multiple days for the past 4 or 5 days, right? It's consistently large volume that exceeds the preceding bullish volume from way back here in this move. Okay, that just tells you that the bearish volume significantly outweighs the bullish volume. Okay, so that's volume for you. And now the Bollinger Bands are also a pretty good indicator. The bands themselves work on a formula that calculates previous price action, identifying support and resistance levels, and creates a cloud, just like the Ichimoku Cloud, but the price typically moves within the Bollinger Bands itself. Now, in the bands, right, typically when the price has reached near the top or is exceeding the band, you expect a correction to the downside, okay? Now, that correction could be could stop in the middle band, which is this red middle band right here. And if it comes to the bottom of the Bollinger Band, you can expect a slight move on the way up, okay? So you can, test this out, right? You can see that the price kept moving and moving to the upside right here. And then finally, the price gave away and broke in the middle of the band back here in December. And it came down to the bottom of the band, came back up to the middle of the band, got rejected, came back down, went to the top of the band, and then came back down, and hovered under the middle band for at least a good 2 months. Then we broke to the top of the band, hovered above it, and then broke down. So this is kind of how you use the Bollinger Bands: top band, middle band, and bottom band. Typically, when the bands are tightening, kind of like you see how the bands are broad back here, but over here they tighten a little bit. Let me give you a better example. Yeah, I mean, I think, yeah, this is probably a good example, right? The bands back here were large, right? And then look at this tightening of the price and the bands, okay? You know that you're due for a move to the upside or the downside. One or the other is going to happen. Bollinger Bands are not so great at telling you which direction the price is going to go. But if I were a betting man and I saw that the bands are tightening and I'm already under the middle band and near the bottom band, you could take a trade up here or down here, and you could sell when the price hits the top of the band, like it did, somewhere close to here, or even over here, or even over here. Okay, that's how you use Bollinger Bands. So that pretty much wraps up our lesson, guys. I've showed you guys how to use the Bollinger Bands, TD Sequential, Ichimoku Cloud. I've showed you guys how to draw support and resistance levels. And now, hopefully you guys understand how to, make complex and, chaotic charts like this, okay? If you guys have any questions, shoot them my way. I'm in the Moon Lounge. I'll talk to y'all soon. Cheers.